All right. So it's Thursday, January 11th, 2024. And we are going to go over today's CPI move on Thursday. So this candle over here, this daily, I'm on the daily time frame. This daily candle, messy day on both sides, but you could capitalize on this candle. I know there's large wick on the upside, large wick on the downside, but there are many ways to capitalize on a candle like this. So when I'm coming in on CPI, I'm watching the higher time frame, I'm watching the daily time frame, and I want to see where it will tap into. Where will CPI drive into? And we have this daily FVG in here, the highest FVG of the market, right in here. And I wanted to see if the market tapped in here, how is it going to react? So dropping onto a lower time frame, just a 4-hour, tapping into that daily FVG, 1-hour time frame. This is 5 a.m. You see, tapping into that 1-hour FVG and cleaning Thursday's high, just wicks above it. 15-minute time frame. So you have everybody longing from London session, pushes the market down, and everybody's trying to long. So there's buy side up here and sell side up here. And it's ridiculous to trade at this time, especially when CPI is at 5:30 a.m. The probability is very, very low for you to come in at London session or before CPI and take a trade. So there's buy side up here and there's sell side up here. CPI opens up, runs the buy side, instantly whips back down, attacking the sell side. So 5:30 a.m., this 15-minute candle creates the point of interest. Now let's drop in a 5-minute time frame. And this yellow box in here is my weekly FVG. And notice how the body closed at the 50% of the weekly FVG. Look at this close at 635. So I have my 5-minute FVG created at 5:30 CPI candle. And this is not something, CPI is not something that I'm gonna participate in, as in I'm not gonna enter ever on the CPI candle. I'm not gonna enter at anywhere in this time. Even if I see a long entry to push up to attack the fair value gap, I'm not gonna take it because I want to wait for the perfect picture. I want to wait to see what's gonna happen after US session going in to the 7 a.m. open. So this FVG was created at 5:30. Price pushes up, taps in to the 50% of this 5:30 wick, instantly wicks back down, and this is that weekly fair value gap. So there's a lot of interest in here. Price pushes down. It's 6:35, 5 minutes into open. 6:40, 5-minute time frame. I get this bearish close. Now I need to look on a 1-minute time frame in here for the bigger picture. Look at this 1-minute closing at the 50% of the weekly FVG. This is my 5-minute FVG. So 6:41, we slice through the fair value gap. And 6:44, 6:45 could have been an entry you could have taken, because once the 50% of this 5-minute fair value gap snapped, this could have been a short entry. Now, I don't look at anything lower than the 1-minute time frame, but if you dive deeper and deeper into a 30-second, 15-second, you'll have a much bigger picture in here. So this move would give you more time in your eyes to enter somewhere in here at 6:42, 6:43. 6:47 could be another entry at the low of the 5-minute FVG. And I'm gonna go back to 15-minute. And there was two scenarios that were gonna play out here. I'm gonna mark out this 15-minute fair value gap in here. And so this is a sell side FVG because you have the bearish candle. This would be a buy side FVG. So I'm looking at this 15-minute FVG in here, if it can be used as an inversion fair value gap to short, because this is not a bearish candle. So 5-minute time frame, I get the 650 close, but I know something has to pull up in here to take out liquidity at 650. And then I could get a nice short entry, because I don't like this candle close at 650. 655. Now I'm pushes up. Now I'm approaching the new hour at 7 a.m. And I already understand that price shouldn't come back in here, because this has all been balanced up here. On a 1-minute time frame, just gonna remove that fair value gap. Just keep that in mind. That's that 5-minute FVG. On the 1-minute time frame, this has all been balanced in here. I have a sell side down here, and I know I'm only looking at, I only want to look at today, but we've been longing all week. So what are so many orders are sitting down here at 6 a.m. So many. And this orange line I have here is the high. I'm gonna go back to the weekly so you know what that orange line is. It's the all-time highs. I have the line drawn on the all-time high. So market taps to the all-time high, creates a point of interest, and I'm watching in between these wicks. In between these wicks. So price traded down, back to the all-time high, ran up, and I'm still watching this fair value gap in here. 611 can be a long entry. 615 gives me my confirmation because now it's ran through this. So this FVG was first used to short. Now this has ran through it. So one retracement into this candle, 621 can be a long entry. 622 could be a long entry. Anticipating it's going to clean this candle, or at least it's going to have, for example, a run up until 6:30, at least clean 50% of this candle at 5:30 a.m. CPI. Just like how this model was exactly the NFP model, exactly the NFP model we traded. Except the narrative is much different and we're playing a way different news. And on NFP, price wasn't at a weekly FVG on the short side. So came back, tapped into that point of interest, closed at the 50%, dropped down. Now going back to the 15-minute, back to this FVG. So I'm watching what's going to happen inside this fair value gap. 645 gives me that close, gives me this bearish close, waiting for the next 15 minute, which is going to be at 7 a.m. Going back to the 1 minute. This is that 15-minute FVG. So I'm watching the 50% of this 15-minute FVG. We didn't exactly tap into it, literally a handle away. But once I see 7 a.m. snaps down, and I know when this candle snaps down, I'm looking for, since that 1 hour opens up, I'm looking for that top wick. So that 1 hour and that 15-minute at 7 a.m. open, already this small top wick made that top wick. But once this candle snaps down, and it's either I'm entering short on this candle as it's snapping down, or I'm being very patient and I'm waiting for one more candle at either 701 or 702 to come trade inside this small little FVG in here. And as this candle trades up and starts trading down, I'm in. 702, I'm in. Once, even if I don't get in here, once this snaps down, next candle's about to open up, I'm entering that. I know it's chasing the 6 a.m. low now. And if you have 50% of the entire CPI range marked, 50% would be last tick. Plus inside that 15-minute fair value gap. And then as price snaps, 7 a.m. So we got to look at what 7 a.m. created for us. So we get potentially into another entry. Now I see this 15-minute FVG created in here. And it's sitting below my all-time high. 7:30, this candle closes below, gives me a confirmation that we're gonna go short. Because if this candle had a heavy bull close here, that's an issue. Closed right below. 5-minute. Look at that. 5-minute at 7:30. Cleans wick to wick. Clean the entire FVG, close below. Next 5-minute, taps into the 50% of this wick. Close below the FVG. 740, close below the FVG. If I'm entering short here, my stop is going above this wick. It shouldn't come above this fair value gap. It could have still played around in here, but it shouldn't trade above it anymore. And I'm in a hot time in the market, 740, 745. Approaching 750 algo. Now this is the 1 minute.
Errol,
Yeah.
can you go back to the 5 real quick? I want to show what my eye was on during this time. So I was just focused, like I saw this and the balance price range of like this wick inside that FVG and how it tapped off of right here, but my eye was on this. And when I saw this close, that was my confirmation of I'm more short biased than I am long biased. Yeah, it was, off of these levels, but at the end of the day, like as long as this candle that Eric drew out held, this thing was going short. So if I look at this, it's a little bit of a dirty structure, but I see this as left leg and this as right leg, especially on the 1 minute when Eric drops down. And you'll see that whenever this candle painted, nothing could cross this candle over here. So my eye on the 1 minute was right here. So now drop down to the 1 minute. Like if you just drop down to the 1 minute, so these boxes stay here. Ah, shit. It's basically that. A little bit off, but basically that. It was like this. And notice this model right here. And then the drop down, rejection, is showing heaviness. So once we had this entry stacked over here in this area, then once I saw this expansion down, I'm gone. That's it. That's your trade of the day. Because from these levels, from here to here, I know this is my next level down here. So over 100 handle range. So I know that it's just a matter of waiting. So when I'm in my trade, when we're saying we're short bias, this is the area. And I'm in the trade. That's it. Like there's nothing more to it. Once we see this expansion down and I have this FVG marked out over here, and I see it rejecting down here, I know it's just gonna accelerate down there. Sorry, too many boxes, but carry on.
So back to that 5 minute. You have this all the closes below the fair value gap and below the all-time high. And notice what we have in here. So some people, for example, would say like, why wouldn't you go short at 722? Okay, if I go short at 722, you gotta throw your stop all the way up here. So I would rather wait. And even if you do and throw your stop all the way above the fair value gap, it's not gonna get hit. But to be safer, I need something created. So from 732 all the way to 734, it creates this point of interest. Isn't it interesting how it creates the point of interest at the FVG? Look at all the candle closes. So small little fair value gap in here, and you have this gap, no upper wick. All the closes. You have so much time. You have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. You have like 15 minutes to enter this. And as this candle is printing, 745, 746, 747 starts printing down. I'm entering. All last ticks. I don't even have a stop. It's like a mental stop because as soon as I enter, it's going my way. But you get that short model, shift in market structure, fair value gap. To attack the sell side in here. Same thing as what happened in here. Same thing, but in a smaller scale. So going back to the 5-minute. So again, same thing. So this is a buy side fair value gap, bullish candle. So I want this to be used as an inversion FVG. Same thing we were looking at on this 15-minute. Back to the 5-minute. We were looking, this is that 15-minute. Back to the 5-minute in here, same thing. That 15-minute I was showing, go back to it. Bullish fair value gap, that 5-minute. Bullish fair value gap. Look at the closes. This snaps through it, gives me the confirmation. 7:55, close below. 8 a.m. new hourly open. 8:05, that new hourly open creates the upper wick right at the low of the fair value gap. Bear close, that's short. Short, short, short. Same thing as in here.
Today was one of those days where it gave multiple opportunities. It gave you so much time to enter the move. Like, it was crazy how much time it gave you to enter the move. And it's CPI day. You need to understand that it's big range day because of the news candle. Because of heavy news, there's a lot of people, a lot of institutions entering on this day. It's the same concept that we talked about with NFP day. There's a lot of people entering on that day. If you notice, the CPI and the NFP candle are very similar. There's a reason for that. There's a reason that they're very similar. So all of these things are noteworthy things. That's why when we come into trade, we know that if we're entering in this range and the range is large, that's because the TP is large. So you can't get scared. What you have to consider managing your account on the risk management side of things is if I'm entering this range and this range extends close to 15 handles over here, if not more. It's more. Maybe 20 handles, 25 handles. Then I'm minimal lotting it. Minimal lotting, I understand that my stop is wide. If you want to play this move, you have to go small. If you don't go small, let's say somebody came in and they took an entry right here on this candle. Well, they're tripping. They're tripping because their stop is right here. When this candle extends up, you're panicking. You should never create a situation for yourself where you're panicking. Guys, I've said this so many times, and Eric has said this so many times, but the minimal lot always wins. The minimal lot always wins. When you actually put your stop where it's supposed to be, you win. The second you close in your stop, the second you're in the entry, and you beat that stop real quick, and that next candle comes up, takes you out, and then goes in your direction, guess what you're doing? You're going to click the button again. You're not going to hold back from clicking the button. Psychologically, it's not going to allow you to hold back. So now you're chasing price, because then you see this next candle down, and you got an entry right here. And the second this thing comes up, you either take the BE or you take the stop, because you don't want to see it go that high, because you're tripping out, because you've been entering so large and you've been thinking that you've been playing the same day that we've been playing. Understand the day. Understand the game that you're playing on the day that you're entering on. Understand that, hey, if I made money on my account this week, then I'm definitely minimal lotting it, because I don't want to blow out the profit that I made on the rest of the week. Eric says it all the time. It's crazy if you come in on a single day, catch 50 handles, lock in a crazy amount of profit, a good chunk of profit, and then come in the next day and blow that profit. Finish the week. I'm telling you, your weekend is going to be so much better if you made profit that week versus if you ended B, if you ended in a loss. You're beating yourself up over the weekend. It might not even be about the loss. It might not be the dollar amount. It's the psychological effect that it takes on a human body. That, hey, I was up on my week. I was up $1,000 on the week. I was up $600 on the week. I was up $10,000 on the week, and I fucked it up. I messed it up so bad because I came in and I tried to catch another move and I took a hit and the BE and then another hit and then a BE and then it went in my direction. That stress of the psychology is a lot worse than watching it go without you, even though you anticipated the move, but looking down at your account and seeing that you're still up. So my point is, minimal lotted on days like big range days. Make sure you end with a win. I've said this, I'll say it again. I have a post-it note on my monitor that's been there since the beginning of my full-time career that says, did you make money or did you lose money? Very important. Very, very important. Carry on.
So back to the 1 minute, whatever we were looking on the 5 minute. Right in here, 8 a.m. Close below the inversion FVG. We want to see it be used as an inversion FVG. Close below, new hourly open at 8 a.m., 8:05. And this is how it looks on the 1 minute. 8:05 opens up, new 5 minute. creates the upper wick, dumps, chasing that sell side. Same scenario as this. Let's go on the 1 hour. And when I say upper wick, so at 7 a.m., that's this small upper wick in here. That's that 1 minute creating that small upper wick. 8 a.m., that small upper wick. But when you dive deeper, when I dive deeper into the 7 a.m. candle, this is the point of interest. This blue box. So we drive price down and it's approaching lunch hour, and this blue box is the December 17th new week opening gap. December 17th new week opening gap. So this is a big TP area on the day, and it's approaching 9 a.m. lunch hour. I don't like trading on the lunch hour. So I'm just watching price and seeing where it has hit, and it's hit a major target. So I'm out, as in I'm taking most of my profit out. If I'm short here, if I'm short here, if I'm short here, or if I'm short at the high, I'm taking a lot of my profit out here on the day. Now, if I want to trade the PM session move, I want to wait till 10 a.m. Shit. I want to wait till 10 a.m. So 9 a.m., 9:40 runs up. I want to wait for the new hour at 10 a.m. New hour opens up at 10 a.m., runs up back to that fair value gap we were short from, that was used as an inversion FVG. And now we're back inside. And look at all these bull closes. These can all be long entries. 10, 10, 12, 10, 11, all of these candles. And back to the 5 minute, that 5 minute FVG we had marked. So that's that 5 minute FVG. This can be another long entry because people are now short on the day. They don't anticipate price to run up. Also, dollar didn't really give me a direction yet, but it's still closing below this fair value gap, daily fair value gap. So the market is still strong. But the reason I was more short today, because at 4 a.m., we had this push up. As in, dollar on the day went long at 5 a.m. And it stayed up for most of the day until late day, dropped back down because it's been stuck inside this range, and it tapped into the 50%. 50% of that daily fair value gap. So anticipating dollar is not going to give the direction yet. Because NAS has moved so much on the day. Everything has moved so much on the day, but dollar still stayed inside the range.
Remember the candle that I told you to pay attention to on dollar still hasn't taken either side of it, up here or down here.
That's the
Still in
range.
that range. That's the range. You need to see this candle on the daily time frame and where dollar wants to close depending on this candle, because it's a very critical, crucial candle.
So PM session, look at that, right off the all-time high. 50% of the fair value gap and the all-time high, 1055. This can be a long entry. Creates the point of interest. Now, this isn't going to go short anymore. 11 a.m. new hour opens up. 50% of that fair value gap. And this wasn't the 50%. This was,
I think that's the high.
yeah, the all-time high.
All-time high.
This will be more accurate on the 50%. Pushes up, equal highs, pushes back down to the 50%, 10, 11, 25. This could be a long entry. And from here to up here, it's like a 40, 50 handle run, but you shouldn't be participating on this PM session.
Errol, can we review something?
Yes.
Can you go to the daily?
Yes. Also, one thing that's a confirmation that we're going to flip is you had this 813 fair value gap. And when we ripped through it, came back, tested the high, started printing bull, new hour at 10 a.m. Gotta anticipate that it's gonna come clean the entire AM session. Daily. And in this messy daily candle, I just showed you on all time frames how you can catch every single move inside this daily candle on CPI.
Now, I want to talk about this. Why that? Why is that the spot that reacted? Correct. NWOG lines up there. But what else? It can't just be one thing. It can't be one thing in that area. 4-hour FVG. 4-hour FVG. Let's look at it. Lev says 4-hour FVG.
Let me show you what I'm looking at. 1 hour time frame. This fair value gap was created. The buy side fair value gap. We tapped into it at 12 o'clock on Tuesday.
These are all right answers, but there's only one right answer for this price point.
But whenever I'm looking at this drop down took out this sell side at 12 o'clock, tapped in.
Correct. As I said, all of these
interest.
are right answers, Zero. But there's only one right answer for this spot. That tick. What is the answer for that tick? We did it together. We reviewed this together. No, go to the daily time frame. Can you take a fib? Grab the fib.
Mm-hmm.
Line up this wick. Flip that fib. Reverse it. On the NQ chart, if you pull this fib, it's literally one tick, 0.25 away from the 25%. So we had that marked out. We had it marked out from this day after we got this day, Tuesday, I talked about this wick and how much significance this wick holds in the overall market condition. And Eric texted me when we had that heavy drop down and we had hedged positions on the Tuesday wick down here, and we're in short at the levels that we talked about a little earlier on. And he said, what direction is this market longer term? Because whatever direction it is, I want to close those positions in full. So I told him, I'm like, it's going to take a lot more than this to convince me that it's short. Why? Because of the level that we marked out on that day after Tuesday. So when I'm looking at this thing and I see that NWOG lines up here, we have that 1 hour and the 4 hour FVG that line up there. But I see that last tick was one tick, literally one tick past the 25% of this wick. So now shrink the screen, Eric. Some of the guys after session, they're like, oh, well, price has moved a lot this week. I don't know if price is going to have that much movement tomorrow. Well, I don't think that that's the case. I think that tomorrow is going to have a very nice opportunity for us. So now, Eric, do me a favor. Don't delete it. Take that wick. What have we concluded about the 25% to the 50%? That if a candle can hold a wick from the 25 to the 50%, it's very likely that it's strong in that direction. So we know that it's strong in the direction of bulls. That's why this candle flipped at the end of the day and closed bull, which is why I said the PM session move was a really good move in regards to giving us direction for the following day. We already capitalized on the move. We capitalized on the short. There's no reason for you to take the long. Don't get it twisted. Just because you know where price is going doesn't mean that you have to enter it. What matters is, did you make money or did you lose money? Were you able to anticipate a move, come in, risk right, and capitalize on that move? The greedy folks will sit there and say, well, if I knew it was a short and then I knew it was a long, why didn't I take the long afterwards? Why would I? I made all the money that I need. The market isn't there to pay me. The market is there to take money away from me. So why would I put risk on when I don't need to put risk on? Nobody in here should have had any reason to put risk on at that point. Because we anticipated the short, we talked about the short, we caught 100 handles off the short, we talked about how it's touching that NWOG, and there's a heavy possibility of retracement on the day to target the levels that we shorted from. That's your cue to take a lot of partials. If the day finishes off bear, great. That's why we leave runners. But it doesn't matter once you've locked it in. Let's say you drop, somebody drops 5 NQ contracts. CFD boys, that's a 1.0. You just got 100 handles. You just made $10,000. This is the part in trading where people lose sight of reality. Bro, $10,000 in the real world. If I were to go someone and tell them I made $10,000 today, they'd be like, what the hell did you do? I'm clearly doing something wrong with my life. Because I go to work all month for 40 hours a week and I bring home 8. How'd you make 10? And it's so simple to make 10. You just have to anticipate the move and have the right balance and risk right in order to make that money. Now, maybe you didn't make 10. Maybe you made $600. Maybe you made $500. Somebody went to work for 8 hours at a good paying salary job to make that money. think about it in a real life perspective. This market is continuous. This market is something that repeats itself over and over and over again. January 11th, the 11th day in the new year. So far, as a team, we've caught, out of the, let's say there's been 9 trading days in this year so far, we've caught at least 7 of the entire daily range of those days. We missed Tuesday of last week, caught every single other day. And we missed Monday of this week, caught every single other day. The market is continuously repeating itself. So when I tell Eric, yo, mark out this range, guess what I'm looking for tomorrow? If we come in tomorrow and price is between here and here, and we can get some sort of long model in here, that's suggesting that this price doesn't just run up overnight. If we get some sort of long model over here, the target is all the way up there. Shrink this chart, Eric. This is going to be the first target right here. And this is going to be the second target right here. Don't be surprised if we come in tomorrow, get a perfect model, and next thing you know, news headlines come out at the end of the day. NASDAQ, S&P, Dow Jones, all-time highs. Dow Jones up 1,000 points on the day. S&P 500 up 100 handles on the day. NASDAQ up 300 on the day. Don't be surprised if you come in to something like that tomorrow. As long as this 25 to 50% holds on the CPI wick, this thing is full-blown long to all-time high. That means that if you had runners from Tuesday in this wick, I'm very confident that your runners are safe. If you didn't get tagged out today, I'm very confident that your runners are safe. Any questions?
That was great.
Yes, today, same thing. Except this was smaller. Let's look at the 5-minute. Same exact picture. But also on a higher time frame, like on a weekly, look at the 2 closes on top of that weekly FVG. Look at these 2 bodies. Tap of the 50%, close above. This tap's like 25%, 30%, close above. And this is this week. And for example, if you're playing this game this week and you didn't catch, I'm playing my narrative. So I wasn't up early enough to catch the Monday long, but I'm anticipating. So when Didn't take a trade on Monday, didn't do anything on Monday, just wanted to see where price was gonna end off and what it was gonna do. Because I missed the move at 6 a.m. And I just didn't want to enter anywhere else in here. So missed Monday, but I understood just what I just said on the weekly time frame. I understood that this potentially, there's a very high chance it could be the low of the week. Plus, with last week, non-farm payroll setting it up. Non-farm payroll sets it up. So this is that shift in market structure. So anticipating Monday can be the low of the week. And what I said on the weekly time frame. And I missed the move on Monday, which is completely fine. I'm coming in on Tuesday and I want to see what price has done for me. So Monday created all this point of interest. Tuesday, all of Tuesday, you're having this creep down. Asian session, trading all equal highs all on the board here. When you look on the 1 minute time frame, they're creeping price down. Nobody's seeing that Monday is going to set the low of the week. I'm coming in on Tuesday. Tuesday, there's a 70% chance that it's going to set the low of the week or high of the week. But when I see Monday has set the low of the week, and I'm coming in and it's Tuesday, trades down to a point of interest on the 1 hour time frame. 6 a.m. pushes up. 7 a.m. is when I started loading up on Tuesday. So if I'm in here on Tuesday and I'm watching this 1 hour time frame, I'm watching the 4 hour, I'm watching the daily, I'm watching where I'm at the weekly once price runs up. Because when I take this trade, my first target is up here. And when it runs through this FVG like this, tests it again at 12 o'clock. And I'm watching all of Asian session and going into London session. And it's trading inside the 50% of this candle and this fair value gap. I'm going to hold my position because I have that new week opening gap from last week. And this market opened up. These were too smooth. When you look at a lower time frame, it's too smooth. So you take this long entry here, you come in, it's Wednesday, 7 a.m. This wick takes out all the sell side of the day, that wick. This 1 hour wick takes all the sell side of the day, taps in to 50% of this candle at 12 o'clock and this fair value gap. 7 a.m. again, I'm going long in here. 8 a.m. long. A lot of entries on Wednesday. Anticipating, I'm gonna come attack that new week opening gap right in here. So I didn't take the Monday move. I came in, I'm in the Tuesday move, ran up 100 handles on the day, 100 plus handles, cleared out majority of my position. I have my runner. I come in on Wednesday, same exact thing, take that position, runs up on the day, 100 plus handles, take my profit. And on the day, it didn't even take out this level. It didn't even take out the new week opening gap.
There was another NWOG right there on that candle. That's why I rejected there, which was also the second standard deviation of this retracement over here. If you pull a fib, oh shit, hang on. If you pull a fib from here to here, this is the second standard deviation.
Yes, and when you see the way the candles traded on a 1 minute time frame at this orange line, the all-time high, instantly pushes back up. But this is a time I'm not in the market anymore. It's approaching close. Price runs up to that point of interest. I'm taking a lot of my long profits out on the week. So I'm viewing CPI two ways. If I see a very clean model, depending on if it's a long model, I'll hold more of my positions. And I'm looking at my Wednesday positions. I know my Tuesday positions are deep. There's a very high chance this is going to be the second low of the week. Because it's a fact that there's a 70% chance that Tuesday sets the high or low of the week, depending on where you are in price. So when I'm coming in on CPI, already floating 300 plus from Tuesday, floating 100 plus from Wednesday, profits taken and runners are running. And I'm seeing it's setting up short at CPI, and I don't want to be inside that CPI mess. I'm not thinking in my head, oh, what if CPI opens up and just blasts? I don't give a fuck. I don't even want to trade CPI. But if it presents something really clean, I'll participate in it. Why not? So I took majority of my profit at 7. It was 7 like 29 right before CPI, 728, 729.
You mean 529?
I mean 529. I'm so sorry. 529 right before CPI. So I'm locking in my profits on the day. I'm locking in my profits on the week. At that, it's already been done. This first Tuesday move that ran up 100 handles, it's over. The week is done. But sometimes you just want to trade this market, and if it presents something clean, why not? You come in, you took in profits from Tuesday. I mean, you've taken profits from every single day. You come in and you enter the CPI move today, just like how we did. You capitalize on the short. You still have your Tuesday runner. You take majority of the short position out, run partials, do whatever you have to do. And if price runs back up, it runs back up. You have your long entry from here on Tuesday. If it didn't run back up and hit break even on Tuesday and just kept dropping down, cool. I have my long position up here. So there is no way I'm losing. Impossible. There's so many ways you could play it. So many ways, depending on what you want from this market. But you need to understand all of this. Some people, they only would, for example, trade this Tuesday move. And once it pops up 40 handles, they're done. That's all they know of the market. But when you understand all of this, you could play it exactly how I told you. You could catch all these swing moves.
Listen, there's so many different profitable strategies, okay? But anytime I hear strategy, I run. We don't have a strategy. Eric and I over here in our group, in our team, we don't have a strategy. We understand price. We play price in a way to capitalize on price to its full maximal potential. We've played it every single way. I'm telling you, I've clicked over 100,000 trades in my life. I've played it every single way, from the scalp side to the intraday side to the swing side. I've done it all. If you understand price, you can create whatever situation you want from it. But if you really want to capitalize on the full potential of price, this is the only way that you're going to be able to do so. This is the only way that you can actually participate in the cleanest moves that the market has. Make sure that you're never losing. We have so many guys in here. They've been with me for a while. These guys used to go wreck themselves. These guys used to go off in the off hours or when we would end the Zoom early on a day because we just caught a 50, 100 handle move. Wasn't enough for them. Their position size was not large enough for their psyche to be satisfied. They were greedy. They would go, wreck themselves, show up the next day, I'll bring it back. Because we understand price. I can give you every single move in the US session. I can give you the 6:30 open play. I could give you the 7 a.m. retracement or continuation. I could give you the lunch hour retracement, the second half of lunch hour, second half of liquidity grab. I could give you the PM session continuation and the end of the day PM session play. I know every single macro that this market has. I've played it. I know which ones make sense to take and which ones don't. I know what I lost on and what I had higher probability winning on. I know which scenarios to play in the London session in order to capitalize on the London session. Don't think that you're bigger than the market, bro. Stop wrecking yourself. If you're in this team and you're incapable of reaching the level that you want to reach by the end of this year, you're not meant to trade. Train yourself, discipline yourself, stay disciplined, take care of your mind and your body, meditate on the charts. I've been with so many different groups, so many different ways of trading. It's all so stressful. People used to come sit with me, they would trip out. They'd be like, how is Ryan so calm? Because I don't care. I don't care what the market does. I don't have that mentality that I have to come here and catch a move every single day, even though I can. I just want the best ones. I want the ones that have the highest probability that I'm not going to lose. I want the ones that are going to run big, where my risk to reward is going to be 1 to 10, 1 to 30, 1 to 50. Those are the plays that I want. I'm going to take my partials in the locations of high probability partial spots. For example, majority of the position today on the short side on my end, I had entries right here. I had entries right here. Eric. I had entries right here. I had entries right here. And I had this range stacked. I took my first partial right here. I took my second partial right here. And I took my third partial right here. Imagine knowing when it's going to reverse on you. Not participating in that retracement, just taking the full profit out. Maybe you leave a very small runner just in case it runs. If it gets tagged out, you're not going to care. You cleared out majority of your position. You locked in your profit on the day. It doesn't matter. When you anticipated price, you played it based off of your analysis. It played in your favor. You locked in good money on it. I guarantee you, you're not going to care to participate anymore. So when you're trading, always think, I made good money. I don't need any more. Because eventually, with that mentality, you will make good money. If you come in here and price around 100 handles in your direction and you're looking at it and you're like, oh, I didn't make enough money, guess what? Accept that your position was not the correct size to satisfy you. Your play was correct. Your position, your risk management was not. Or maybe your account balance wasn't. I said this yesterday. So what's next? How can I change that to cater to my personal needs? These are all important questions you have to ask yourself. Every day that you show up, whether you made money, you lost money, it was break even. How can I lose less? How can I make more? How can I do this better? I've been trading like this for about 2 years now. Till this very day, I sit down afterwards on my own in front of my chart and I go through price of the day exactly how Eric went through price. This is why we do market review, so that you get it again, so that you see it again, so that you understand how you played it again, and you understand how you could have done it better. Before you guys all existed, before this business existed, Eric and I used to sit here and do this together every day. Exactly what we just did with you guys on this session, me and him would do it together. People used to dream of participating in this session with us. Don't take that lightly. You guys are blessed to have us. Use us. Use our knowledge. Use everything we're giving you guys because we've done it. We played it every way. And I guarantee you that if you just do what we're telling you, at the end of this year, you're going to come to me, you're going to be like, right? Damn, bro, I can't fucking believe it. Because when you get to that level and you feel like you're on cloud 9, nothing in life matters anymore. You're not going to have a care for anything in your life. Everything is different now. Nothing is the same. You're not going to think about people the same way. You're not going to be thinking about money the same way. You're not going to be thinking about the world and economic events and social media and this and that. None of it is going to matter. You know why? Because forever in time, you're going to know this market and how it works. And forever in time, through the highs and lows of life, you're going to have a way to get yourself out of the lows, and you're going to have a way to capitalize on the highs. You could take me and Eric right now, drop us off homeless on the middle of the street, and I guarantee you in 6 months we've bounced back. That's the power of this game. That's where your focus is, to learn how to do this. How does the market work? We have some guys in here, they've been showing very big dedication. And I really appreciate that. You know, I started trading way before Eric. Eric met me through a good friend of ours. Eric didn't come to me and ask me, hey, Ryan, how much money do you make? You know what Eric would ask me when he would see my chart posts? He would ask me, Ryan, how did you catch that? How did you know that that was going to do that? And I used to just talk to him about it because I appreciate the guy that asks me that question. The guy that asks me, how much do you make? He's not for this game. Because he doesn't have a genuine interest in this game. He'll never make money in this game. If he does, it'll be for a short while until he blows it. You need to have a deep understanding of why the market did what it did. Do you think there's a single thing that happens in this market where Eric and I look at each other, we're like, bro, why did this happen? No, there's nothing. It's been a very long time since the market has surprised me with the move. That doesn't exist. I know exactly why they did it. Sometimes they do it in a very annoying way, but I know why they did it. I could see it. That's just the market. Repetition, repetition, repetition. Take the play, last tick, take your position off, clear it, leave the runner. If you're on a live account, you can hold through the day and play the game. Everyone in here is playing a different game. Some guys are on funded accounts, some guys are on demo accounts, some guys are just trying to learn, some guys are on live accounts. Everyone in here is playing a different game. Understand what game you're playing. If you need help building a roadmap from where you are right now to get to where you want to be, hit me up individually and I'll help you do that. Because I've been through it all. I'm so excited we had today. Because the guys that have been paying attention, the guys that have actually been learning some things, they executed some things, and they took that step in their game plan for the next milestone. I'm ready for my next step. And that's how you grow in this game. By understanding why you did what you did and moving forward and reaching the next step and the next step and the next step. Until you look back and you're like, bro, I got this. I'm chilling. I'm gonna pop in tomorrow, drop a 5 lot. I'm gonna drop 25 minis. I'm gonna catch a 100 handle move, bang out 50 racks. I'm done for the month. Might take a trip. Might not. Might just lay in my bed and stare at the ceiling. We do this for freedom. Create that freedom for yourself. This game is tough. You gotta be tough. Don't be weak. Get tough. Stay tough. On that note, amazing review, Arrow. If you got nothing to add, I'm gonna call it here.
Chilling.
I'll catch you guys in the AM. You guys already know my market anticipation. One last thing. Eric, can you pull up that time frame that you had right there? Thanks to weekly. One last thing.
CS.
Look at that structure up there. And then now pull up the 1 hour arrow. I mean, not the 1 hour, the 12 months, 1 year. And look at that. Very similar. So guess what? If this week closes above the previous weekly or all-time high, next week, drop down, move up. All right, fellas. I'll catch you guys later.
Thanks, brother.
Thank you, brother. See you guys. Have a good night, guys. Thank you for the review.
See you, bros.
Good night, guys.
Good night.